Session 12 of Module 1 of Fundamentals of Financial Management of 4th semester BBA of Mangalore University. This is the last session and we shall do a revision in this session. Let us see the recap of previous sessions and important questions of this module. In this entire module, we have studied about, this is financial management and overview. We have studied about the meaning and definition of financial management, importance of financial management, scope of financial management, that is traditional approach, under traditional approach and modern approach. Financial decisions, major financial decisions, there were 4 types of financial decisions, that is capital budgeting decision, that is also called as investment decision, capital structure decision, that is regarding equity shares, preference shares, debentures, bonds. Then dividend decision. Dividend is when the company earns profit, whether the entire profit is given to the shareholders or a part of profit is retained with the company, or instead of giving cash dividend, bonus shares are given to the shareholders. This is related to the dividend decisions. And the 4th one is working capital decisions or liquidity decisions. Working capital are the short-term funds which are required to meet the day-to-day expenses of the business, to meet the bills, rent, salaries, etc. Next is functional areas of financial management. Then functions of finance manager. What are the functions performed by the financial manager, finance manager in this financial management? Then the changing role of financial manager. Here we have studied about the functions of controller and the duties of the treasurer, or the functions of chief finance officer. Then the organization of finance function in corporate setup, and finally the time value of money, that is to give importance to the present situation or the present condition or the current situation is more beneficial. The money that you receive today is having more worth or value than the money received in future. So these are the topics that we have studied in module 1. Now let us see the important questions that are asked from the examination point of view from this module 1. We have 4 mark questions, 8 mark questions and 16 mark questions. In section A, 4 mark questions are asked. So you may expect define financial management, definition regarding financial management. Then what do you mean by risk return trade-off? What is financial forecasting? What is time value of money? 8 mark questions. Describe the importance of financial decisions. Explain the functions of controller, or they may also ask you the functions of treasurer, or both controller and treasurer. Explain the significance of financial decisions. Importance of financial decisions. Then what is wealth maximization? Explain the merits of wealth maximization. They may also ask you what is profit maximization and what are the merits of profit maximization. So these are the 2 main objectives of financial management: profit maximization and wealth maximization. Again, wealth maximization is superior to profit maximization. Then explain the limitations of profit maximization objective. So as there are limitations in profit maximization, wealth maximization objective is considered superior to profit maximization. So these are the expected questions for 8 marks. Next we'll see 16 mark questions. Explain the role of finance manager. Then explain the major financial decisions. How do they involve risk return trade-off? Major financial decisions. There are 4 financial decisions: capital budgeting, capital structure, dividend decision, and working capital decision. And the risk and return, the more risk, the more return, and you should balance between the risk and the return while making decisions. Then explain the superiority of wealth maximization objective over profit maximization as a criterion for evaluation of financial decisions. So the benefits of wealth maximization over profit maximization. Then what is financial management? Then explain the scope of financial management, and here the scope is explained in terms of traditional approach and modern approach and in terms of risk and return.